Oh my God, ladies and gentlemen. Yeah, April 2nd, Reciprocal Tariff Day, much worse than anyone was expecting. In this video, I will break down the details, show you what's happening to markets right now. S&P's getting just absolutely destroyed. And I will really tell you this. These reciprocal tariffs are really bad for East Asia, especially bad for China. Not as bad for Canada and Mexico, though. So there's a little bit of a trade-off here. Overall, markets do not like this. It was much worse than feared. And before I give you the actual numbers, let me explain what Trump did. Trump took VAT taxes, currency manipulation into account to create these reciprocal tariffs for each country. So it's not just based on those countries' tariff rates, but it can also be based on currency manipulation. Meaning a lot of these countries' central banks, they artificially, weaken their currencies. So on their conversion or on their, exports, they get paid more than they otherwise would have, essentially. Like it's a way of kind of tariffing a country without actually tariffing a country. So Trump is taking all of those extra things into account to come up with these numbers. And let me tell you, the S&P is down about 2% right now. It does not like this whatsoever. So let's start with some of these numbers. So 20% tariff on the EU, 34% tariff on China, 46% tariff on Vietnam, 24% tariff on Japan, and the UK gets a 10% tariff rate. These were much higher numbers than anyone was expecting. And if this is in addition to what we already have on these countries, especially China, that's bad. So all of East Asia is just really getting worked. And there's a lot of manufacturing that takes place in Vietnam and Thailand and China. That's an issue. And the US will apply a 32% tariff on imports from Taiwan. Again, pretty much all of your semiconductors come from Taiwan. That's going to put a lot of pressure on that industry. And Donald Trump says that this reciprocal rate is only half of their tariff rate when you calculate all of the other non-tariff barriers. You also have a 26% tariff on imports from India, another big manufacturing country. You also have a 31% tariff on Switzerland and a 49% tariff on Cambodia. There is also now a 25% tariff on South Korea. There is now a 30% tariff on imports from South Africa. There is a 10% tariff on imports from Brazil, a 17% tariff on Israel, and Trump announces that there is a baseline tariff of 10% across the board, whether you are hit with these reciprocal tariffs or not. Donald Trump says tariffs will give us growth. And Trump says this to foreign leaders, quote, terminate your own tariffs and start buying American goods. Trump's 25% auto tariffs will extend to nearly $600 billion worth of auto parts, computer imports. That was a much bigger number than people were expecting. And Trump says auto tariffs will cover all computer imports, including laptops and desktops, $138.5 billion worth in 2024. Trump reiterates that companies will invest in the US. And Trump says he calls these kind reciprocal tariffs. Like, it could have been much worse. And these tariffs will go into effect starting tomorrow. So it's interesting. The S&P is currently down about 2.3% here in after hours. A crazy big move. Almost back down to the low of this correction. But when we actually heard a baseline 10% tariff, markets ripped on that. And then he went into the essentially VAT tax reciprocals, currency manipulation reciprocals, and now you're up shit's creek. Like, this is a far worse outcome than anyone was expecting. This will put the US economy into a recession. There is 100% certainty of that at this point. There's no other way to put it. The faster you know that, the better prepared you can be. Specifically, why I've been talking about having cash on the sidelines for a long time now. And you can see via these tariff announcements, TLT is moving higher. TLT is now at 92.04, up 0.67%. And as the markets sell off, if we continue to sell off and hold these losses into tomorrow, I'm sure you're going to see TLT absolutely skyrocket tomorrow. And that's really because, well, you're essentially guaranteeing a recession at this point. Now, what's actually interesting about this whole thing is Trump is doing this in a way that you really can't get rid of these tariffs, right? He's taking into consideration currency manipulation and VAT taxes. These countries could cancel their VAT taxes, but they're not going to stop their currency manipulation, right? They almost couldn't, because they've been doing it for so long and their system is reliant on it. So it's a very weird spot to be in, and I think Wall Street's saying, yeah, this is probably not a negotiations tactic. This is probably like a collect revenue kind of tactic. What's also pretty interesting about this move is you're getting a broader sell-off here in after hours. XLP, the consumer staples ETF, is down 0.5%. So like everything's getting hit. The momentum ETF is down 10 times more. It's down 4.5%. So definitely growth and high beta and everything, in that realm is going to take it a little bit harder. But it's kind of everything that is selling off here. Look at these big tech names. Amazon's down 5%. Nvidia's down 4%. Google's down 2.5%. Microsoft's down 2%. Apple down 5% here in after hours. A lot of that has to do with East Asia is just decimated by these tariffs, whether it's India, China, Thailand, Vietnam, doesn't matter. That's the area that's really going to be hit the hardest from this. And I think that's why this is almost inevitably guaranteeing a recession, because there's a lot of companies that have their manufacturing in those countries that do these VAT taxes, that have the currency manipulation, not even necessarily a bunch of tariffs, which, yes, those countries do have tariffs as well on America. There's almost no way of getting around this. This could end up being a huge impact to S&P earnings this year. And if you really want to boil it down to that, recession or whatnot, if you don't even care about that, boil it down to earnings. I mean, just name the company. They probably do a fair bit of manufacturing in India, China, East Asia. That's kind of where most manufacturing is outside of the US. If you don't do it in the US, you're doing it in that region, right? You're not doing your manufacturing in Europe most of the time. You're not doing a whole lot of it in Mexico or Canada. A lot of manufacturing is in East Asia, and that's where we get a lot of our products. So it's a huge negative for company earnings, especially considering it doesn't look like there's going to be too many countries or companies, I should say, that actually get like a exemption or pass on this. So it could be huge, a huge negative impact for companies' bottom lines. Okay, and let me just give you kind of the rundown of all of these countries again. I'll go ahead and share this on X. You should be able to find it pretty easily. But China, this is this left column here in blue and white is tariffs charged to the USA, including currency manipulation and trade barriers. 67% from China. That means their reciprocal tariff is 34%. European Union at 20%. Vietnam at 46%. Taiwan at 32%. Japan at 24%. India at 26%. South Korea 25%. Thailand 36%. Switzerland 31%. Indonesia 32%. Malaysia 24%. Cambodia 49%. The UK 10%. South Africa 30%. Brazil 10%. Bangladesh 37%. Again, a country that does a lot of manufacturing as well. One of the most populated countries in the world, by the way. Singapore, 10%. Israel 17, Philippines 17, Chile 10, Australia 10, Pakistan 29%, Turkey 10%, Sri Lanka 44%, Colombia 10%, Peru 10%, Nicaragua 18%, Norway 15, Costa Rica 10, Jordan 20, Dominican Republic 10, United Arab Emirates 10, New Zealand 10, Argentina 10, Ecuador 10, Guatemala 10, Honduras 10, Madagascar 47%, Burma 44%, Tunisia 28%, Kazakhstan 27%, Serbia 37%, 10% for Egypt, 10% for Saudi Arabia, 10% for El Salvador. This country, actually never heard of that, 21%. Laos, 48%. Botswana, 37%. Trinidad and Tobago, 10%. Morocco, 10%. These are much worse numbers than Wall Street had in mind. So, I think if you really want to boil this down, the markets are going to be grappling with, especially tomorrow, but really until something changes, that we're guaranteed going into recession now. Like, that's going to happen. It's also a pretty much a guarantee that company earnings are going to be affected by this a lot. I mean, these numbers were not on anyone's bingo cards today. And, how does that affect the labor market? Do companies try to fire people to kind of make up some of the margin so their stocks don't get decimated? There's no way of shaping this in the near term as a positive. And I think that's why Scott Besson and Trump, they've been telling you, prepare for a recession, that the U.S. economy is going into a detox period. And I mean, they've had an idea this was what they were going to do. Just some people didn't pay attention to that. And now Wall Street has to pay attention. And that's kind of the knee-jerk reaction that you've seen today in after hours. And unfortunately, markets are going a lot lower from here. Like, that's going to happen unless Trump were to, tomorrow come out and say tariffs are canceled or something. But that doesn't sound logical, right? It wouldn't make sense to do that. So from that perspective, you just opened up Pandora's box for downside in this market. It's kind of up for interpretation. Like, how are these going to affect earnings? How fast or how soon are we going to be in a recession? Question's not, are we going into one? It's, how long's the recession going to be? Is it going to be a shallow one? Is it going to be a hard one? That's the questions that Wall Street is now going to start asking. And it will be interesting as well to see what firms say about this, what major, banks say about this, and how the bulls try to, kind of twist this into, the bullish narrative. Long term, this could be bullish. It probably will be. Short term, it's very, very negative. So again, you want to have cash ready to go. Cash is king. No margin. Margin is a no-no right now. And I've been explaining this on the channel for a while now. And again, unfortunately, the next big level below your 300-day moving average, which is at about 549, I expect we probably break below that tomorrow, is this 500 level here, this 500-day moving average. That to me seems inevitable that we get down to those levels, although it's not going to happen overnight. That would be peak to trough downside of about 18% from all-time highs. And that is further downside from here of roughly 9% or so, kind of give or take on that number, 9.2%. So you're opened up for a lot more downside at this point. That's the bottom line. The upside is just not going to come from this. Now, jobs report coming out on Friday, also going to be a very big deal. And that can have its own set of implications for markets. But again, with tariffs like this, it's going to hit earnings for this year. Wall Street's going to have to bring down their earnings estimates. it dramatically raises the odds of a recession this year. If they were already previously 40-50%, you're going to have to double those odds, most likely, bring those up to 70-80% odds of a recession this year. And I think we all know why. Again, Scott Bessent and Trump have said there could be a recession this year. I mean, they know the damage that this will do in the near term for American business. It's no surprise. They knew that. So, yeah, I think it's really time to prepare for a recession. If you have not done so already, if you watch these videos and you just haven't prepared yet, today's your wake-up call. I mean, do what you want, but you should be paying very close attention to this because, yeah, nobody expected this would happen. And it does say baseline tariff rate will go into effect on April 5th at 12 a.m. So essentially Friday night at midnight. Senior White House official says executive order will list reciprocal tariffs by country. And it also says that Trump will declare a national emergency on trade. And I guess if you wanted a little bit of good news, Canada and Mexico are not subject to reciprocal tariffs for now. But again, those rates are crazy high on East Asia, and that's what the markets were not expecting. So let me know what you think about this information down below in the comment section. Again, it's just really not a good situation now. You don't want to have margin debt right now. You want to be fully preparing for a recession, and the best way that you can benefit from that is cash. Have as much cash as possible. Have no margin debt. No margin debt. This is not the environment for margin debt. Now, coming out tomorrow, we will get the balance of trade, exports and imports for February. That'll help feed into your GDP report. You also get ISM services PMIs coming out for March tomorrow. You're expecting basically across the board things to get a little bit weaker from last month. Besides prices is expected to go up, but not like a full plummet or anything like that. So not expecting much of a move, but things to get a little bit worse. And then Friday, you have your non-farm payrolls, your unemployment rate, and a speech from Fed Jerome Powell. So again, let me know what you think about this down below in the comment section. I think the markets kind of are telling you how bad this is. And I think it's ultimately bad for recession. Recession odds are going to skyrocket, and earnings expectations are going to plummet for the S&P this year. And I do think TLT is likely going to catch an even bigger bid if the markets are going to sell off this much. TLT is only up 0.5% here in after hours, but I do think we're probably going to rise a couple more dollars on TLT here in the near term as those recession fears really start to culminate in markets over the next couple of hours and ultimately days. So let me know what you think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.